Imagine this. You're the new management accountant at Gadgetron Inc., makers of the G-Pod. Sales are booming, but when you check the warehouse, 5,000 G-Pods are missing. It's a modern corporate mystery. This is where internal controls come in, rules and procedures to prevent losses and protect the company's future. Alright, so we've established that internal controls are super important. But what are they really? Let's break it down. In the simplest terms, internal controls are the policies, procedures, and practices a company puts in place to achieve its objectives. Think of them as the rules of the game that help a company win. These rules are designed to safeguard assets, ensure the accuracy of financial records, promote operational efficiency, and encourage everyone to follow the company's policies. The big three categories are preventive, detective, and corrective controls. Imagine you're trying to keep your house safe. You lock the door before you leave. That's a preventive control. You have a security camera. That's a detective control. And if someone does break in, you have an alarm that calls the police. That's a corrective control. Each one has a different purpose, but they all work toward the same goal, protecting your stuff. Understanding this trio is fundamental for a CMA. By mastering these three categories, you gain the vocabulary and the framework to diagnose and solve critical business problems. Preventive controls are the superheroes of the internal control world. They are proactive, the guardians at the gate. Their entire job is to stop errors or irregularities from happening in the first place. Think of them as the ounce of prevention that is worth a pound of cure. Let's go back to Gadgetron Inc. What preventive controls could have saved them from their inventory nightmare? First, segregation of duties. No single person should have control over an entire transaction from beginning to end. Another key preventive control is proper authorization. This means that certain transactions require approval from a manager. Physical controls are also huge. Things like locked warehouse doors and keycard access systems are all preventive. Ultimately, preventive controls are about designing better processes. For a CMA, recommending strong preventive controls is crucial. So, you've built your fortress with strong preventive controls. But here's the thing. No system is perfect. People make mistakes. Determined individuals might find a way around your defenses. That's where detective controls come in. These are your sentinels, your watchdogs. Their job isn't to stop the problem, but to find it as quickly as possible after it has occurred. At Gadgetron, a key detective control would be regular physical inventory counts. This is exactly what led to the discovery of the missing 5,000 G-Pods. Bank reconciliations are another classic example. At the end of the month, an accountant compares the company's cash records to the bank's statement. Another powerful set of detective controls involves performance reviews and variance analysis. As a management accountant, this is your bread and butter. You would create a budget for how much it should cost to produce 100,000 G-Pods. Then, you compare the budgeted costs to the actual costs. Internal audits are another prime example. Detective controls provide the crucial feedback loop that tells you whether your preventive controls are actually working. So, you've tried to prevent the problem and you've successfully detected it. Now what? This is where corrective controls spring into action. They are the third and final piece of the puzzle. Their purpose is twofold. First, to fix the immediate problem that was detected, and second, to put measures in place to prevent it from happening again. Let's return to the unfortunate saga at Gadgetron. The detective control, the inventory count, found the 5,000 missing G-Pods. A corrective control would be the immediate action taken. This would start with a full-blown investigation to figure out what happened. If theft is discovered, filing an insurance claim to recover the financial loss is another corrective control. The second, and arguably more important, part of corrective control is about long-term fixes. Think of corrective controls as the process of continuous improvement. Corrective controls close the loop, ensuring that the organization doesn't just find its problems, but actually learns from them and evolves. It's tempting to think of these three controls, preventive, detective, and corrective, as separate, independent things. But that's not how they work in the real world. They are not a checklist of items. They are a dynamic, interconnected cycle. One control feeds into the next, creating a loop of continuous protection and improvement. Understanding this cycle is what separates a good accountant from a great one. Let's trace the cycle using our Gadgetron example one last time. Initially, Gadgetron had weak preventive controls. The problem was eventually found by a detective control, the physical inventory count. The discovery then triggered the corrective controls. An investigation was launched, insurance claims were filed, and procedures were analyzed. The findings from the corrective investigation directly informed the creation of new and improved preventive controls. The system learns and adapts. This cycle is perpetual. As a CMA, your job is to analyze this entire cycle. A balanced, integrated approach is always the most effective and efficient strategy. Spotting controls in CMA questions? Ask, is this action stopping, finding, or fixing a problem? Preventive controls use words like require, authorize, or restrict. Think barriers and approvals. Detective controls look for review, compare, or audit. These check what's already happened. Corrective controls use investigate or update. Actions taken after a problem is found. Master this, and you'll ace your exam and your career. So, why do we care so much about this? Why is it a cornerstone of the CMA curriculum? Because as a certified management accountant, you are more than just a historian who records what happened. You are a forward-looking business partner, a strategist, and a guardian of the organization's integrity and value. Internal controls are the primary tools you will use to fulfill that role. Your expertise in designing, implementing, and monitoring these controls is what makes you incredibly valuable to any organization. Your role begins with design and implementation. You'll work with department heads to understand their processes and identify risks. You provide specific, actionable advice based on your understanding of preventive, detective, and corrective principles. Next, you are a monitor and evaluator. Controls can become outdated. Your job is to continuously evaluate the effectiveness of the control environment. Finally, you are a champion for a culture of control. By promoting integrity and ethical behavior, you help create an environment where controls are respected and effective. This leadership role is what truly defines the modern CMA. As we wrap this up, let's zoom out. The world of internal controls can seem complex, filled with jargon and detailed procedures. But at its heart, it's about a very simple and powerful idea: being in control of your organization's destiny. The three types of controls are the building blocks for achieving that state. They are not just exam topics, they are your future professional toolkit. Preventive controls are your proactive shield. Detective controls are your watchful eyes. And corrective controls are your response team. Ultimately, understanding internal controls gives you a kind of superpower. It allows you to see the hidden risks and vulnerabilities that others miss. It gives you the ability to build stronger, more resilient, and more successful organizations. The mystery of the vanishing inventory at Gadgetron was solved not by a detective in a trench coat, but by a management accountant who understood the power of controls. That can be you. So embrace these concepts, master them, and get ready to be the hero your future company needs. As a CMA, you are the architect of a secure and efficient business.